Righto, this is the third segment with Jacinta Walker from Walker Financial. So if you need anything financial wise, you would ring
0449 875 811.
Okay, and of course that's going to be tagged. So let's talk about investment loans and investors at the moment, because people are not getting any money in the bank.
Correct.
So that's what is putting such a huge amount of pressure on the availability of stock, because investors are just buying it and they're getting more money than they would in the bank. So do they pay the same rate as say I do if I buy a property?
Yes, it's analysed differently and different category of risks. So generally it's a higher rate for investment. If a client is lucky enough to have paid off their home, however, and if we're using the home for investment purposes, there are some banks that will lend you the owner-occupied rate.
So if you've got a lot of equity in the existing property,
yes,
you can just use that and they'll give you the same rate.
Correct. Yes, not all lenders, just some.
Who? We don't want to name names.
Yeah.
No, fair enough. So an investor would pay 0.5% more than an ordinary owner-occupier?
That would be fair to say. Yes.
Okay, so if they're paying 2%, the investor's paying 2.5%.
Correct. Yes. And there are some specials that come out every now and then as well with different lenders. I think I saw one come through 2 years fixed at 2.29 for investment.
Why do they do that?
To buy business, to open the floodgates. So the people at the top who create these credit policies and pricing are very clever, and they decide which areas of the bank and niche sectors to lend to, and when they want to close the floodgates, they just turn up the pricing, so change the policy.
So they're manipulating the market in many respects, aren't they?
That's your words.
Oh, nice one. Okay.
You could say that.
You could say it. All right. So is the LVR rate, and what's the LVR rate again? What does that mean?
So that's loan to valuation ratio.
Which is generally 5%. You can do that as a home occupier.
Correct.
Can you do that as an investor?
There's 1 or 2 lenders, but you're going to pay a lot more in rate and fees.
How much more?
1 or 2% higher.
Okay.
Yes.
Which, in the grand scheme of things, is not that much, is it? Really?
Well, look, I mean, if you're talking about a historical average interest rate up until a few years ago of 7%, if you're still paying an interest rate of 4.5% or 5%.
I must admit, my very first home, I paid 16.9%.
Yes.
Under the recession we had to have with Mr. Keating. So 1% here or there, if you're doing something, really doesn't make that much difference, I don't think.
In the scheme of things.
Okay.
Yes, courses for courses.
So, do they do interest only again? Are they still doing that?
Again, they price higher for interest only. So they price more for investment, say 0.5%.
Excuse me, I'll just get this phone. Bad timing.
So 0.5% more for investor, and then another 0.5% or so for interest only.
So they have. My understanding was they can only have 10% of their books interest only. Is that still the case?
Each bank might be a little bit different, but they basically encourage clients to pay off their loans, and they do that by changing the pricing.
Right.
So interest only is really popular for investors to free up cash flow, especially for new investors, just to get used to their loan and get into it. But yeah, it's the banks who are wanting principal and interest. And if you look at the comparison of, interest only and what the remaining loan term is of principal and interest, and being on that higher rate for interest only, it might be better off to go P&I from day one. But that's my job, to give you both options and compare. So P&I is principal and interest.
There we go. We love jargon in the real estate world, don't we?
So
just want to quickly talk about bridging loans, because this is something that more people should look at. Lots of people want to sell their house, but they're worried that they can't buy another place till they sell it. So there might be a bit of bridging loan. We know who will talk. We recently helped someone.
That's right.
What's the process there? Is it as scary as everyone thinks?
It is not as scary as everyone thinks. When it comes to buying and selling, depending on the timing and how fast you want to move and which settlement will happen first, bridging is an awesome type of loan that you can get, that you can buy without the pressure of selling. You've got up to 12 months to sell your home. The maximum loan to valuation ratio is 70% at the peak debt. So it's really for those clients who have a lot of equity built up. I've done a lot of those, especially for older customers as well, who might not need a loan long-term ongoing, and they wouldn't qualify for a normal loan. But it's an awesome option for them to get into a new property.
So lots of equity there, and it's not scary. There's no pressure on them because they can then go shopping.
Correct.
Right.
Yes.
Okay. Because I think we should do that more often.
Well, it depends what position the clients are in. The fees are not that crazy as well.
What's the interest rate on a bridging loan?
They are more expensive. They're going to be in the fives, and it may be in a $600 establishment fee, something like that.
All right, so if we're talking a $500,000 loan at 5%, what are the repayments roughly?
I'd have to come back to you on that.
Come on, I expect you to do this.
Look, if it was principal and interest, something like 25,000-30,000 a year, but interest only would be a lot less.
That's $500 a week. Like that's not. I just think more and more people.
And that can be capped onto the end of the loan balance as well.
Is that right?
So you don't actually have to pay for the full amount as you go.
So many people I speak to are in that situation where they want to move but they can't because they don't have any cash and they don't want to sell first, and it's a lot of people are there. And I think you should think about it. Bridging loans, I think, are the way forward. I really do.
Yeah, and I get it. For a lot of clients, it's overwhelming. It's a huge decision, and most clients might only move 3 to 5 times in their lifetime. But that's my job to handhold them every step of the way.
So if you need any hand holding, Jacinta's the lady, not me. I'm not a hand holder. What's your telephone number again?
0449 875 811.
We're in a brand new building at 80 Upton. Well, it's actually an awesome building, 80 Upton Road in Bundall. Thanks for coming.